There's so much fear in the market. VIX still at elevated levels, currently about 60. I mean, what are you hearing from your clients? Are they hoping to liquidate even more? Are they holding a lot more cash?
Okay, I think generally for those, the first priority is to maintain liquidity, to have sufficient dry powder, and also to manage your leverage. I think clients over the last couple of weeks have reduced their leverage as much as possible, but you do need to remain invested. I think the first thing you need to do is to review your portfolio to make sure that you hold quality stocks, companies that are strong with a strong balance sheet and good cash flow, okay, that can withstand this crisis. I think that's the first thing that we're advising our clients.
They're liquidating somewhat. Can you talk about the level of cash they're holding? Anything between 50 and 90%. What are you looking at?
Not so much. I don't think for those who are well positioned, who are not leveraged, I think they're raising cash, but to up to 20%, 30% in some cases. But the remaining amount that are invested are well diversified across asset classes.
You said investors should remain invested. What opportunities do you see now? Are your clients looking to buy on the rebound?
No, I think you use a rebound for those to increase your liquidity. So you use the rebound to sell some of the items or some of the securities that you do not want to hold. I think that's the best time to do it, during a rebound. But not to get into the market at this stage. And if you do want to get to the market at this stage, you do have to have it in stages.
Now, we're hearing, Bahrain, that banks are making margin calls to their customers. Are clients able to meet those margin calls?
Unfortunately, some clients are not able to meet. Those who have been highly leveraged will have difficulty because the lack of liquidity in the markets is causing a big spread between bid and offer. So unfortunately, some clients have to liquidate at a very distressed price. So I think what we are doing is really to inform clients to bring in as much collateral as possible now to make sure that we are able to support the client's position.
Can you quantify the level of distress for us back at Bank of Singapore versus other rivals?
It's very difficult for me to make that assessment, but clearly when I mentioned about distress, it's a very select few of clients who are traders, who really use leverage to maximize their return during the good times. I think really most of the investors, majority of the investors, I would say, are not in that situation. They do liquidate to reduce their exposure to the market, but they are not in a situation to have to sell in a very distressed market environment.
Bahrain, even before the pandemic, Singapore was looking at a higher level of bankruptcies. What can we expect by the end of 2020? How will it look like?
I think the outlook definitely is not rosy. I think we are only beginning to see the first part of the crisis. Many countries are still not well prepared, still do not have a clear plan as to how they're going to deal with it. The fiscal policies and the monetary policies has been supportive, but without a clear plan to how to address the health crisis, I don't think we have seen the height of what we're likely to see in the coming months.
So really difficult times for clients, volatile times in the markets. How are you helping your clients? Are you looking at easing borrowing terms, for instance?
Sorry, repeat that again. Reducing?
How are you helping your clients? Are you maybe hoping to ease borrowing terms because these are such volatile times?
We are continuing to remain in contact with clients. We continue to update clients on all the positions that they have with the bank, all the funds and the investment that they have with the bank. We let them know as to what they need to do with their portfolio. We make sure that we update on using all the different platforms and make sure that we are accessible. Make sure that our platform to be able to execute the spike in volume. So I think these are the things that we do. Clearly, we also encourage clients, as I mentioned earlier, to make sure that they reduce their leverage and take the time, any market rebound, as an opportunity to reduce their leverage.
And of course, when we last spoke to you, you talked about your expansion plans. What's happened to that expansion plan? Are you still planning to hire? And if so, which markets?
I think the first thing our first priority is to protect jobs. I think that's the first thing we want to do. We want to give assurance to all our staff that we are here, that we are going to support every employee during these difficult times. We're going to provide all the necessary support and care, and to make sure that they adapt to this new working environment. I think that's the first priority. Hiring will be second. If there are opportunity for us to look at good hire, we still look at that. But I think we have to also bear in mind that in this market environment, new bankers will have difficulty in bringing clients over in these difficult times.
So having said that, are you still looking to onshore China to bank the rich in the country?
Definitely. I think there's a market that we cannot ignore. I think the market continues to evolve. There are opportunities, and we always position ourselves to take advantage of these opportunities.
And Bahren, before we let you go, I mean, there are opportunities out there given the sell-off. Are you looking at any acquisition?
Not at the moment. I think, as I said, the priority now is to stabilize the clients and the employees, the organization, the platform, the business that we are in. I think as we do keep an eye open on opportunities, but not at this moment.